All right, let's talk about the mystery charts methodology in action. We have one leftover mystery chart and we have one new one this week. And this one now has become it's a new mystery chart, but it's been recommended for a few days and now it's become a Landry light pullback. By the way, that fascinates me, as I've said many times, that a lot of times some of my best setups, you go back and they come from the most simplest of setups. And some of the biggest winners we've had, especially this year, have come out of Landry light pullbacks. Just a really simple pattern. You want about 10 or 20 days of upside Landry light, meaning that lows are greater than the moving average. And then you look for a little kiss of the moving average. In other words, the Landry light goes to 0. And I'm using the 30 EMA for this. And you see a nice little pullback. And this is an IPO, so this is a nice little, this one kind of took off with a bit of vigor and has since pulled back. Here's the parameters: entry, stop, IPT's initial profit target. As you know, or you may know, we take partial profits at the IPT half. There's the entry, there's a stop, and there's the initial profit target. So we'll see if it triggers, and I'll follow up with it in future webinars. So this one's still a mystery chart. This is one I was thinking about. It did become a Landry light pullback last week. I think it was just above the EMA, but you can see we actually have one little tiny bar of Landry light, little inside day below the moving average. So Landry light again, lows greater than the moving average. That is illustrated down below. And then we pull back to the moving average. There are your parameters down below. Entries here, stop is here, and IPT is up here. And by the way, this one did kind of make like a double top, and initially, and what I was telling my peeps is to kind of use your mind's eye and put these bars together, like a weekly bar for these 5 bars or so, and that would give you a knockout looking bar. So double top knockout, you get a little minor double top, like peak 1, peak 2, and then bam, knockout bar. So this is kind of similar to that on a conceptual basis, okay? And conceptually correct basis. I got an email just a few minutes ago, and I put this in the Facebook group. We're long the stock, and I tell you, it's been frustrating lately, obviously, but we've had some stocks in the portfolio sort of take off and then come back in, and take off and come back in. And yesterday and today were kind of like a come back in type of thing. In fact, this one sort of took off earlier this morning. And I got an email, like I said, right before it went live, and he said, I always post my profit taking orders as LMT, GTC, that's limit good to cancel, active doing both regular and after hours trading. Now, with the core methodology, I normally don't do that. And one disadvantage of doing that would be that, let's say you have a nice big fat gap tomorrow. It doesn't happen all the time, but every now and then it does. We had one recently, and then not so recently, that had really nice gaps overnight. NNE comes to mind, and there was one fairly recently that kind of took off, but then came back in and we stopped out. But we did get more than the 1% overall in the first low because we had an overnight gap. Now, I will do this in IPOs, not all the time, but quite a bit. And I've had it happen like in after hours trading on the same day I get in, and it's absolutely amazing. But sometimes with an IPO, when you're getting in on like a buy at B, it's kind of a scary pattern because you're buying into that close and you're kind of just stepping into the unknown. Whereas when you're buying in the middle of the day, you kind of see the market rally up a little bit, or the stock, I should say, the stock rally up a little bit, and you see the trigger and you kind of know how it shakes out. But just kind of, it takes a lot of faith to buy with the buy at B pattern. But I love it. I find them kind of fun to trade. But anyway, you're buying that new closing high, and sometimes that market might already be extended. So I'll put in an order, good till cancel in after hours. And a lot of times I'll get hit on that order, and I still have my second low. So I'm kind of throwing this out there as not me telling you to do this with the core methodology, but just as kind of a thinking out loud thought process. And I think in great markets, you probably don't want to do this, but in markets like we are in now, a limit order good to cancel, meaning that it's going to execute in after hours if hit, might not be a bad idea, because sometimes crazy things happen in after hours. And this is what he's saying here. The IPT on this one was, I don't have it labeled, but it's 315, as you can see down here. And by the way, if you want to see all of these trades, warts and all, davelandry.com/archives. And if you're watching the recording of this on Friday the 20th or later, there's a link down below for that. But anyway, so he had a limit order in. He got hits on that limit order, and after hours, you can see it came right back in. So this is kind of a feed the ducks while they're quacking, or as I used to say a long time ago, let them have it. And there was I think it was Frankie and Johnny's or whatever. Anybody from around New Orleans? I don't know if it's still there or not, but they used to have these stupid commercials, and they had this big fat black man that would sit in the back of the place with a big cigar. And when people come in like, I'm on Social Security, I don't have no credit, I don't have no money. It's like, and the big dude would say, let him have it. He was a let him have it man. So that's kind of how I feel in general with the initial profit target is let him have it. And I guess that I gave that speech locally, and it made a lot more sense in New Orleans because of the, I think it's Frankie and Johnny's. But anyway, maybe there's some on YouTube. So just kind of throwing that out there. Again, I do it in IPOs quite often, usually in an IPO, because to me, it's like a game. You know, you're getting in on a close, you're like, oh, geez, what's going to happen? I wonder what's going to happen. It's not like you're getting in on a pullback in the middle of the day, position trading, and you can kind of see how it shakes out, good, bad, or indifferent, whereas the buy at B, you're buying a close and you're kind of stepping into the unknown. Both are stepping into the unknown, but it seems like it's a lot more unknown with the buy at B. And a lot of times you'll get that, I'll get a zing, I'll still be working on my trading service or whatever, and I'll get a zing, and it's very exciting to get that fill in after hours. So not that I'm trading for excitement, but I think it's definitely something you might want to do with the buy at B. I need to think about it with the core methodology. Now, the thing that I was thinking about is with the core methodology is you still have that second low should everything go crazy and gap and all. So it's something to kind of think about. And, you know, how often does it really gap open and do that? Okay. Dave, do you have any rules when it comes to sector risk, total portfolio per sector? That's a tricky one. As a general statement, my official, unofficial rule is in the core portfolio, two stocks in the same, two full positions of the same sector in the portfolio. Now, if one hits the IPT, and well, let's just say they both hit the IPT, so now you've gone from 4 total down back to 2, 4 pieces of a position. Let me just rewind that so it'll make more sense. Let's say you have 2 full positions and then you sell half and sell half. Now you have 2 half positions. So you've got 2 half positions in the same sector. That's only 1 full position. So now you've opened up a slot for another position in that sector. Now here's where it gets a little tricky, and that's kind of what I was alluding to earlier. Sometimes you could have a stock that'll trade a little bit different than the overall sector. You could have something that's really hot, especially like an IPO or whatever, and some of these little hot areas lately, quantum computing or something like that, where it's okay to go in and do some things. Sometimes biotechnology could be like that too, where stocks could trade kind of independently of the sector themselves. So we could certainly flesh that out a little bit more. And Nick, and if you have any more thoughts on that, we could talk about that. I'm going to go through the TFM 10% system pretty quickly because we've covered in a lot of detail. If you want to go in and learn more about it, there's plenty on my YouTube channel on that. And in fact, I spent a lot more time last week than I intended to. In fact, every week I spend more time than I intend to on that. Looking forward to the day you published a list of a million little things. Yeah, I'm working on that. I need to start. I've got a master list I'm working on, but I forget to put them in every now and then. It's really easy to keep up as you go, but with over time, it begins to add up. Anyway, so here's the P's of TFM 10% system. These zones here, 0% means that you're at 50 week highs, not 52, but 50 week highs. And I use 50 versus 52 probably because I was using a 50 simple moving average. But anyway, so right there, the market is 0% away from its 50 week closing high, okay? And then this is within 5%. This is more than 5%. And then down here is more than 10%. And the idea is to just get out of the way when you close below the moving average, which is my whipsaw filter, and more than 10% away from the 50-week closing high, you exit. So the last exit would have been right there. And then the last buy You need 2 bars of Landry light. Buy's a little bit more stringent, help keep you out of trouble. Bar 1, bar 2, so the buy would have been on that close. And again, as I repeat often, this is on a calendar basis. The system was designed. That's just purely by accident. It happened to be that stock charts where I got the data from uses a calendar basis. Some other charting packages use a rolling basis. So like Thursday to Thursday, Wednesday to Wednesday, etc., as opposed to only Friday to Friday on the weekly charts. And so far in back testing and in walk forward real-time testing, which includes some real money, which I'll show you in 1 second, the calendar basis versus the rolling chart doesn't seem to make that big of a difference. But anyway, we had a pretty big sell-off. You can see we're still in the green zone. We're still within 5% of that 50-week closing high. The sell will be way down here at 54.36 if my eyes are working. As I've said ad nauseum, I took 100 shares a while back, and you can see the actual trade in last week's weekly chart every now and then. I'll put the trade in to show you. And I'm still long that, and the stop would be right there. And this gave up about $1,000 from last time. In fact, you can take a look at this. It's down 14 points, I guess Friday to Thursday, if that's how that chart works. So that's kind of an ugly dip. That's $1,400. But I seem to remember we were up right around 20-something, 20,000 and change, and now we've given up $1,000, or I've given up $1,000 on that one. Anyway, as I said quite a bit, one thing I wanted to show you, or continue to show you, I should say, is when you're in longer term trend following mode, your drawdowns can really be abysmal. And that's why I like to take a hybrid approach. And that's what we're doing with the core methodology. And even with the IPO stuff, we're taking partial profits to help kind of mitigate those drawdowns. And on occasion, when we're able to ride out a trend for a long, long time, you will still get those big drawdowns, but they're kind of mitigated because, I hate to use the term the market's money, but you're kind of playing with the market's money, and you already took some profits off of the table. And that's why when you look at the spreadsheets in the service, when I show the spreadsheet, it'll show where we took the partial profit. It'll have that as the slot still in place, even though the trade has come off. Half of that trade has come off. And then that's so you can see how the entire trade worked out in the live portfolio that I show every day to my peeps. Anyway, you can see these drawdowns are quite substantial. And this one, truth be told, hurt a little bit, $8,000. Now, when I got in this, as I've said ad nauseum, I thought it would just be kind of like an S&G type of thing, like, oh, I'll get in and we'll see what happens and blah, blah, blah. And it's 100 chance, who cares? But now it's beginning to turn into some real money. And $8,000 is $8,000. It's a pretty serious drawdown. And you can see on that last little leg down, should it stop out, and I hate to use the word hope, hopefully it doesn't, that would be, what was that, $6,600, I think? Yeah, $6,600 drawdown, which would suck, but it would still make a little money overall, 14K or so. Anyway, as I said, late in the day, I was thinking, what would happen if you did TFM 10% in Bitcoin? And one of the first things I thought about was the bands would be way too narrow. You see your little green band up there because Bitcoin is so volatile. Now that's gonna begin to change a little bit over time as the prices get higher and higher and higher, and the market begins to mature a little bit. It becomes more efficient, and all these derivatives coming on. But anyway, you can see the bands are really tight. Now the only reason that I think it works with these tight bands is because the 50 simple weekly moving average is just so far away. And that's why it works, because that's part of the rules to the system. Again, that's the whipsaw filter. Oh, by the way, over here, MS Dev says, looking forward to the day you publish the list of a million little things. If you go to my YouTube channel and you go to Trader Quick Clips, every time I do a million little things, I throw it over there too. So that's probably where you can get the easiest way to get them all. But that's really, I know you want to party with me, but that's really been a lot of fun in that series. And I had something I think is really cool this week. You know, everything turns to trading. My wife's like, look at this dog. And I'm like, oh, okay, we could make that into trading. But anyway, when I looked at the first trade on this, I was pretty impressed. Bitcoin was at $371.56, and it ran up to 7,062. So that's like 362. That's like an 1,800% gain. So I'm like, well, wait a minute, this thing might work, almost 1,900%. And the other thing I noticed fairly quickly was the drawdowns are abysmal in Bitcoin. Okay, it's a volatile market, and I think it's going to dampen a little bit over time. But just remember, and I don't know who said it first, but it's very important to remember that and this is something I tell man on the street, people in the gym, they start asking me about markets and all. I'm like, well, that's fine. But just remember that every asset class will lose at least 50% of its value at some point in its lifetime. And I've seen some pretty big spills, obviously, in my lifetime in Bitcoin. I've seen the stock market go down more than 50% a couple times. I think it went down 70, I always forget, 73%, the NASDAQ, that is. And then obviously back in the 20s, the P's lost about 90% of the value. But anyway, I did this little trade back test or whatever, so to speak. And it got me thinking that, okay, well, maybe there is some merits here. I've always thought that the zones, it wouldn't work because of the zones, but turns out it actually does work if you're using the moving average. Now, I didn't audit this. I just kind of threw this together last minute, and see, there's that 1,800% trade right there. Start with $10,000. And here are the trades. And so you've got only 5 trades in 8 years, and then this one's still open from April 24th of 23. That's kind of cool. So if you put 10,000 in and then you parlayed that, or what's the word, compounded that, good or bad, but in this case it was all good, you can see it did fairly well. Now this was a losing, so you got 1, 2, 3, 4, you got 5 trades again. 2 were losers, but if you look at this one, you got in at 8,193, okay? And the high of the move was 14,000 round numbers, or 13.8 if you want to be more specific. So that's I should have done it earlier. I think that's a 40 or 50% move, but you still lost in the trade. So the point I learned from that, from looking at this system with Bitcoin, would be that you would definitely want to have a profit target or some kind of money management. If you're up 50%, then by all means, you probably want to take half of your shares off and then reset when you get back in on the next signal. And then right here, again, you could see, let's see, 54,007, and it hit 65,005. So that's 10,000. What's 10,000 divided by 50? Is that 20%? Should be, yeah, it's 20%. So you had a 20% move. That's nothing to sneeze at, especially once it's getting these higher numbers. So again, maybe some money management would work. Now, one thing that kind of shocked me was buy and hold actually wins by $1 million, okay? $1 million and change. And initially I was shocked, and I said, well, hold on, Dave. You got in, or the system got in at 371.56, the same time the other system triggered a buy. So put them both at the same time, see which happens, see which one wins. And buy and hold beat the pants off of it. Now, here's the thing. The designer's intent of this system was to avoid the so-called diaper change moment. And that comes from Ian McAfee. That's when the market, like I guess yesterday was a diaper change moment for a lot of people in the market. For me, it was just a stomach ache and a lot of F-bombs. But anyway, the original thought was to try to avoid these diaper change moments. And this is how far the market dropped after you got out. So there's 50, let's say 1, 2, you got 3 greater than 50% drops. And this one was 67%. Now, here's the question. And what would the world be without hypothetical questions, said Mr. Wright. Could you really hold through a 70% drawdown? I don't know. I think even ludicrous would say that's ludicrous. I can't imagine anybody would do that. And this last trade, by the way, is still open, okay? So it's up 232%. Now, again, the reason it worked was because the market if you squint your eyes or you look at it from across the room, the market went straight up. Yeah, it lost 70% and 50% or more 3 times, right? But overall, it did go straight up. So buy and hold will beat a system if the market starts here and ends way up here, obviously, okay? Longer term, though, it will not. And the other thing to realize is there's a value in sitting in cash and being out of the market, especially during a 70% drawdown, right? And so you can see that out of the 9 years that I calculated on this, you were out of the market about 3 of those years, or 35% of the time. So I forget what it is in a TFM 10% system, but it's probably very similar, where you're out of the market at least 30 to 40% of the time. And it's nice being able to sleep at night and not be in the market. So that's kind of the original designer's intent. This might need to be tweaked a little bit. Maybe those zones could open up a little bit, but the moving average is going to be so far behind, I don't think it's going to matter. And that's one thing that I can never wrap my head around. It's like, okay, well, how do we adjust for other markets, maybe with historical volatility or some other volatility measurement? Because the S&P 10% is such a good round number, but that moving average might be the key to that. Now, the zones, again, are probably less relevant at 10% because Bitcoin obviously can move 10% overnight or in one afternoon, or used to at least. So anyway, I'm throwing that out. No opinion. I'm not saying run out and do it. I'm not saying I'm doing it, but I do find it kind of interesting, and it does kind of help you wrap your head around why you do trade a system. You trade a system so you could hopefully avoid, especially a system like this, which is made to avoid diaper changes, you could avoid those huge diaper change moments. Anyway, we'll get to live crypto in a few minutes. Just real quick, as I've been saying, the Landry 100 is just 100 momentum stocks. And on this capture, I think it was only 98 because a few of them came out. And I was waiting for better stocks to put in. But one thing that was kind of fascinating yesterday is that, and again, to those new to this list, I just buying stocks at brand new 52-week highs, and I'll probably adjust that parameter down. God forbid we go into a bear market. But I'm buying it at 52-week highs. I don't think it would work if you bought just a few stocks. And I think Jeff last week, or I want to say last week, it was a couple of weeks ago, was talking about statistically, would you really need all 100? And I have a hard time putting statistics to things because markets aren't normally distributed. But I know, like in the S&P 500, I know some of these stock pickers that are fund managers, they actually put 90-something% of their portfolio, not all of them, but I know some of them do, into enough stocks to mimic the S&P 500, and the rest of the money they kind of play with. And that way, they're always right in line with the S&P 500 and they don't lose their job. I don't know if that would work with a momentum list. And in general, I'm really skeptical of statistics. And the reason I'm skeptical is statistics are worthless. 74.5% of all people know that. Anyway, so everything's bought at new highs. But what fascinated me yesterday was there were a couple of these quantum computing stocks that are in this list, not in my own portfolio, unfortunately, that went up triple digits in spite of yesterday's debacle. Now, momentum does end badly, so a lot of these today came back in hard, like 30% or 40% after yesterday's big pop. So that's kind of an interesting thing. And by the way, the Landry 100 does not have any money management whatsoever. I've toyed with the idea of, like, if you're up 100%, maybe take off half, and that way you got a free position, free and outright position. So that might be something to kind of think about.